Good morning and welcome. I am David Dwyer, Global Director of Research for Bloomberg Intelligence. Bloomberg Intelligence is Bloomberg's investment research department. Bloomberg Intelligence covers more than 130 industries, 2,000 companies, and dozens of markets across equities, fixed income, currencies, commodities, and many other areas. Every year, we partner with Bloomberg Business Week to come up with a 50 companies to watch for the year ahead. And we're very excited to introduce that this year. I think one of the points that I would make is 2020 was obviously a tumultuous year. And I think one of the things that everybody noticed is that when the markets started to recover in post the early stages of COVID, is that it was driven by large cap growth companies. Well, we think the opportunity is going to be a little different in 2021. In a couple of days, you're going to be hearing from Gina Martin-Adams, our global equity strategist. And she's been talking for a couple months now that the opportunities are going to shift towards a catch-up in companies that are more value-oriented and smaller cap. And that's where we're hoping to catch some of those opportunities in our 50 companies to watch. With that in mind, I want to point out the 50 companies to watch are really broken down by a number of different themes. And those themes start, the largest of which, not surprisingly, is a post-COVID recovery and what companies are really going to benefit from the post-COVID recovery. But interestingly, most of the other themes have some relation to a post-COVID recovery. A green recovery is also important to us. New products, oftentimes those new products are new products that are going to become more important in a post-COVID world. Digital transformation, in many cases, have been accelerated because of COVID. And of course, there's always situations of corporate actions, such as management changes, IPOs, divestitures, and so on. And then finally, the last three are areas where has e-commerce really accelerated and changed to another stage post-COVID, or smart healthcare, obviously, or fintech or digital payments. What I'm going to do now is I'm going to talk about 5 companies that we think really represent a good cases of our 50 companies to watch. And I will point out that these companies are across different parts of the world. And I hope that many of these companies you've never heard of, because we're really trying to identify companies that maybe are not widely recognized versus so many companies that get a lot of attention. So let's start with the green recovery. A company that we are really interested in is Albemarle. Albemarle is a U.S. company. It's the leader and leading supplier of global lithium, which you may be aware is a key ingredient in batteries. Albemarle controls about 30% of the global lithium market, which is about $3 billion. And our analyst believes that the market for lithium will probably triple over the next 5 years. And Albemarle is in particularly good position to capitalize on that, particularly even in the next year, because it can expand its capacity rapidly with expansions in both Chile and Australia, and even additional resources in the U.S. He also thinks prices for lithium will start to rise as demand recovers, or demand increases in both Europe and in China for electric vehicles, and that demand will drive prices higher. Some of the early stages of pricing he thinks you're seeing in China in the fourth quarter. Moving on to fintech and digital payments, we go down to Africa and Kenya specifically and talk about Safaricom, the leading cell phone carrier in Kenya. And what's interesting about this company is it's an innovator in virtual banking. About a third of its revenue come from digital banking, and it's much faster. It's a much faster growth business than its cell phone business. What's interesting during COVID is they expanded the limit for fee-free transactions to significantly, and that created a lot of awareness and the ability for customers to use their phones for digital transfers. The value of transaction growth has increased from what it used to be 8% to now more than 30% as the awareness has increased. The company generates 5% free cash flow, a strong 4% dividend yield, and it has an opportunity to expand into Ethiopia in 2021. Moving back to the U.S., we talk about Teledoc in the smart healthcare area. And as we all know, smart healthcare has really been expanding in importance given COVID. And Teledoc is really a leader in this business. And while it's a $2 billion business projected for 2021, our analyst feels that the total market is going to be closer to $250 billion in opportunity over the years. So huge, huge opportunity to grow. He also believes that COVID jump-started the virtual health business by 5 years. And you can see that for Teledoc. Teledoc had something in the neighborhood of 14 million virtual visits in 2020. That's more than double what it was in 2019. So you can see how it's really jump-started the opportunities for that business. They've also started to go through and have a transformational acquisition in chronic care capabilities, such as hypertension and diabetes, which in and of itself is a $45 billion market. Moving back to another area, Europe, and a company called Wizaire, we're always, I think everybody's looking at, what's going to happen to the airline industry and which airlines will recover well in this business. Well, our analyst thinks Wizaire is one to really point out. It's an Eastern European upstart. Prior to COVID, it was the fastest growing airline in Europe, very well positioned, low-cost provider of provider of air services. The point I think our analysts would make is it has enough liquidity to survive the crisis. It's so well capitalized that it could cover all of its fixed costs through early 2023, even without any of its planes flying. It's really very impressive. Its low cost profile and no unions compared to its peers really put it in a position that it's been able to expand market share in Europe. Most importantly, it's heavily exposed to faster growing economies in Eastern Europe, such as Hungary, Poland, and Romania. And finally, I'm going to go back and talk about digital transformation. And we're going to go back to Africa, in this case, South Africa, and one of its most important banks, Kappa Tech. In this particular case, this is a bank that really is a great example of a company that's benefited and grown significantly over the past number of years through digital transformation. It's custom-built, a branch network that's built on top of a strong technological innovation. It's got advantages over its competitors because it's got about a 40% cost-to-income ratio compared to its peers at 60%. And this high efficiency leads to return on equities of 25 to 30%, high growth rates versus return on equities of 15% for its peers. Its fully integrated technological platform is something called Global One. And what it does is it really enables all of its customers to see all of their products in one digital place. Also allows for their customers to be cross-sold those products. And not only is this a company that's been focused on the mainstream consumer banking business, but it's a company that will be able to expand this digital platform into all sorts of other areas, including higher net worth customers, small business banking, and even insurance. So with that, thank you very much, and please do not hesitate to reach out if you have any questions on any of the companies that we've presented in our Bloomberg Business Week 50 Companies to Watch. Thank you.